Nvidia delivered exactly what the market asked for. Driven by global demand for artificial intelligence, the chipmaker posted a massive $82 billion in Q1 revenue. Investors immediately reacted. In early pre-market trading, the stock climbed over 1%, setting the stage for a massive tech rally. But this visualization tracks what actually happened at the opening bell. While Nvidia was positioned to soar, the broader market indices plummeted. The Dow dropped 250 points, and the tech-heavy Nasdaq Composite went into a steep decline. By the time regular trading began, Nvidia erased its early gains and opened lower. The market's strongest catalyst for growth was neutralized. This creates a strange paradox. Traders actively sold off a record-breaking corporate success story on the day of its biggest triumph. Market attention shifted from Silicon Valley toward a developing geopolitical wildcard in the Middle East. Iran's supreme leader issued a directive explicitly ordering that enriched uranium must remain within the country's borders. That single mandate instantly eroded hopes for a diplomatic resolution between Washington and Tehran. Looking at this line chart of intraday commodity pricing, we see the immediate reaction. Global benchmark Brent crude jumped 2.5%, breaking past the $107 mark, while West Texas Intermediate spiked to $101 a barrel. Raw geopolitical friction translates instantly into a quantifiable physical squeeze. The physical energy market exerted more leverage over investor sentiment than digital tech growth. Elevated crude prices trigger a specific economic chain reaction. When oil prices rise, energy costs follow, making it highly likely that inflation will remain high. High inflation limits the options of central bankers. Any expectations for near-term interest rate cuts from the Federal Reserve were quickly discarded. This tracks the symptom of institutional gridlock. The 10-year Treasury yield advanced to 4.63. Bitcoin, the largest cryptocurrency, fell 1.2% to $76,710. Currency markets reacted in tandem. The US dollar spot index rose, while the euro, British pound, and Japanese yen all moved lower against the dollar. In a macro-driven event, nearly all asset classes react to the shockwave. Crypto, legacy chipmakers, and currencies all buckled under rising US interest rates. Nvidia's $82 billion in revenue demonstrated massive microeconomic growth. Yet the combined force of geopolitical tension, spiking crude oil, and rising yields dictated the market's overall direction. Individual corporate innovation can drive specific stock performance, but systemic macroeconomic forces ultimately determine the movement of the entire financial ecosystem.